Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial secrets that move the markets. And in this filing, we're going to see just how much the market is moving based on these Fidelity reports. The numbers are pretty eye-popping, so buckle up. In this report, we're diving deep into the financial health of several Fidelity advisor funds as of May 2025. We'll be sifting through their investment strategies, their market sectors, and crucially, their top holdings to uncover what makes these funds tick. Let's kick things off with Fidelity Advisor Series I, a major player in the investment world. Their semi-annual report gives us a snapshot of their performance as of May 2025. First up, the fund size for the Fidelity Advisor Growth Opportunities Fund, a colossal $25 billion. That's a massive amount of money to manage, and it shows their significant presence in the market. Now let's talk about what they're invested in. They've got 200 holdings. That means they're spread across a lot of different companies, which can be good for balancing risk. The portfolio turnover is at 63%, which suggests they're actively managing their investments, buying and selling securities more than once a year to try and capture opportunities or reduce risk. When we look at where the money's going, information technology is their biggest bet. At 43%, that tells us they believe in the growth potential of tech companies' communication services is next at 22.4%, showing a solid interest in that sector as well. Consumer discretionary at 9.8% and financials rounding out the top four at 5.6% paints a picture of a fund focused on growth areas while also maintaining exposure to more traditional sectors. It paints a picture of a fund focused on growth areas while also maintaining exposure to more traditional sectors, and backs at 20-25%, showing a solid interest in that sector as well. Consumer discretionary at 9.8% and financials rounding out the top four. Scroll common stock squirrels, over 93% of their assets are in common stocks. This is typical for an equity focused fund, but it also means they are heavily exposed to stock market fluctuations. Geographically, their diversification is heavily weighted towards the United States. At 94%, Taiwan follows with 1.6% and Singapore with 1.3%. This strong US focus isn't surprising given the global economic landscape. Looking at their top holdings, the giants are there. Nvidia Corp is their largest at a significant 12.7%. Microsoft Corp is second at 9.9%. Meta Platforms in Class A and Amazon.com Inc. round out the top holdings with 6.8% and 5.2% respectively. These are all major tech players, and it clearly shows the fund's conviction in the technology sector. So now let's see the costs associated with this investment. Scroll cost paid as a percentage of a $10,000 investment. Scroll kissed Fjellfotzer a pay to be 0.86% on that $10,000 hypothetical investment. That's $43, which sounds small, but imagine that scaled across billions of dollars, it adds up. Next up, Fidelity Advisor Dividend Growth Fund, also reporting as of May 2025. Their fund size is about $1.7 billion, significantly smaller than the Growth Opportunities Fund. They hold 122 positions, so a bit more concentrated than the previous fund. A portfolio turnover of 95% indicates a very active trading strategy. They are definitely trying to capture short-term gains or react to market changes quickly. Sector-wise, industrials lead at 20.5%, followed closely by information technology at 19.3%. Financials are third at 18.4%. This differs quite a bit from the previous fund, showing their strategy is geared towards different market dynamics. Their asset allocation is almost entirely in common stocks at 99.5%. Very little room for anything else. Geographically, like the previous fund, they are heavily invested in the United States at 89.9%. Canada is second at 4.2%, and the UK at 1.8%, making up the rest of the significant allocations. Their top holding is Nvidia Corp at 6.3%, followed by Microsoft Corp at 5.8%, and then Meta Platforms in Class A at 4.7%. It appears growth stocks are still a major focus, even for a dividend growth fund size. Let's check the cost for this fund. Scroll costs paid as a percentage of a $10,000 investment. Scroll for Class M shares. The cost was 1.23% on that hypothetical $10,000 investment. That's $61, showing a higher expense ratio, likely due to the class structure compared to the Class A shares of the previous fund. Now let's look at the Fidelity Advisor Value Strategies Fund, also reporting as of May 2025. This fund has a size of $1.65 billion, putting it in a similar range to the Dividend Growth Fund. Portfolio turnover here is 63%, again showing active management is a key strategy. Sector allocation wise, industrials lead at 21.3%, financials are next at 19.3%, and consumer discretionary is at 11.3%. This value-oriented fund shows a different sector preference compared to the growth-focused ones we've seen. Again, almost all assets are in common stocks at 99.6%. Geographically, the US dominates at 92.6%, Canada is second with 3.4%, and Puerto Rico claims 1.0%. Checking the top holdings, First Citizens Bancshares Inc. NC Class A is their top pick at 1.9%, followed by East West Bancorp Inc. at 1.6%. This indicates a focus on financial sector value plays, but let's see the costs here. Scroll cost paid as a percentage of a $10,000 investment scroll for Class K shares. The cost was 0.62% on that hypothetical $10,000. That's $29, quite a bit lower than the other classes we've seen. Moving on to the Fidelity Advisor Small Cap Fund as of May 2025, $28 billion with 138 holdings. Their portfolio turnover is 28 holdings. Their portfolio turnover is 26%, which is much lower, meaning they hold onto their investments for longer periods. It suggests a more buy and hold strategy. Sector allocation shows industrials leading at 19.7%, financials at 17.9%, and information technology at 14.4%. These are the dominant sectors for this fund, which makes sense as small cap companies can often be found in these growth areas. Asset allocation is solidly in common stocks at 99.8%. Geographically, the US exposure is 89.2%, Canada next at 4.2%, and United Kingdom at 1.9%. Top holdings include Ensign Group Inc. At 2.0%, Carpenter Technology Corp. At 1.9%, and Mr. Cooper Group Inc. at 1.8%. These are smaller companies as expected given the small cap focus, so let's check the costs. Scroll cost paid as a percentage of a $10,000 investment scroll for Class Z shares. That's 0.82% on $10,000. That's $38. We've seen a lot of the same players in these top holdings: Nvidia, Microsoft, Meta, Amazon, Apple, Broadcom, Alphabet. These tech giants are clearly front and center across many of Fidelity's funds, regardless of their stated objective like dividend growth or value strategies. The dominance of these few companies is a significant trend to note. And importantly, the filing also gives us the breakdown of the what did the fund invest in section for Fidelity Advisor Series Growth Opportunities Fund for the period ending May 2025. This highlights their investment in common stocks at a massive 95% of their net assets. Information technology is the dominant sector at a huge 43%. Communication services is second at 22.4%. Consumer discretionary at 9.8%, and financials at 5.6%. We can see a clear tech focus here. Their top holding is Nvidia Corp at 12.7%, a significant portion of the fund's assets. This shows a strong conviction in this single stock, a move that can lead to big gains or big losses. Looking at all these reports, it is clear that Nvidia and Microsoft are major holdings across many of these Fidelity funds, and this suggests a strong belief in the future of technology and ongoing innovation within these companies, even if the stated fund objectives vary. The focus on growth companies, even within dividend or value strategies, is quite telling about the current investment climate and what these fund managers are prioritizing for their investors. Paddy Mao. For the very important part, the financials, let's look at the statement of assets and liabilities for Fidelity Advisor Series Growth Opportunities Fund as of May 2025. Their total assets are over $964 million. Their investment in securities at value is a whopping $915 million, and that's after accounting for securities loaned out. Scroll net asset value end of period is $16.56 per share. That's a solid number, but when we look at the financial highlights, we see a different story. The total from investment operations for the 6 months is just 0.18%. That's quite low considering the fund size. Then we see a portfolio turnover rate of 101%. This indicates they are actively trading stocks, selling and buying them quite frequently within the year. And as always, we see the standard Fidelity disclaimers reinforcing their brand and copyright towards staff and a strong preference for US markets, with tech and financials being key sectors. Top holdings consistently feature the major tech players, indicating a belief in their sustained dominance. What's interesting is the variation in portfolio turnover, suggesting different strategies at play even within similar fund families. Some are actively trading while others prefer a longer term approach. The costs are also important. Class C shares consistently show higher costs reflecting their different fee structure, which is something investors should always be aware of. Regarding the investment advisory contracts, we see the usual affirmations from the Board of Trustees. The nature, extent and quality of services are deemed satisfactory, and the fees are considered reasonable. However, the underperformance of some funds compared to their benchmarks and peers is noted as something the board is actively discussing with management. This signals potential pressure on those specific funds or strategies to improve their investment results. In essence, Fidelity Advisors funds are heavily invested in US large cap growth and tech stocks, with active trading strategies in some instances, but a more buy and hold approach in others. The sheer size of these funds and their significant exposure to a few dominant tech companies are key takeaways. And that's our deep dive into these Fidelity Advisors semi-annual reports. What are your thoughts on their strategy and performance? Let me know in the comments below. If you found this breakdown useful, give us a like and subscribe for more easy to understand insights from the world of corporate finance. Thanks for watching, and I'll see you in the next one.